Good morning and a warm welcome. I'm Sage for Kalkine TV, reporting to you live from Sydney, and you are watching the Global Markets Roundup. Let's dive into some of the key highlights and happenings from yesterday, starting with the US market. And the global equity markets rallied on Tuesday as US and European tech stocks rebounded and the dollar regained strength ahead of the US payrolls data on Friday that could reveal the Federal Reserve's next move on tapering its support to the economy. MSCI's All-Country World Index, a US-centric gauge of stock performance in 50 countries, rose 1.01%. The benchmark US indices bounced back strong to close higher on Tuesday, October 5th, boosted by robust gains in the technology sector. Economy-linked stocks also saw significant gains. The S&P 500 was up 1.05%, while the Dow Jones rose 0.92%. The Nasdaq Composite rose 1.25%, and the small-cap Russell 2000 was up 0.49%. The Commerce Department said on Tuesday that the US trade deficit hit a record high of $73.3 billion in August. US goods exports were $149.7 billion in the same month, the data showed. Traders will now eagerly wait for the Labor Department's payroll data on Friday. It gives a weekly analysis of the labour market's progress, one of the key metrics to gauge the economic recovery. Technology, financial and communication stocks were the top movers on the S&P 500, and 9 of the 11 index segments stayed in the green. Real estate and utility stocks were the bottom movers. PepsiCo stock gained 1.02% after reporting quarterly results on Tuesday. It reported revenue of $20.18 billion in the third quarter, while its net income was $2.24 billion. It now expects its organic revenue growth to be 8% up from its previous forecast of 6%. Moving on now to the futures and commodities market. Gold futures were down 0.38% and silver decreased by 0.08%, while copper fell as well 1.31%. Brent oil futures increased by 1.71% and WTI crude was up 1.78%. Taking a look over the bond market, and the 30-year Treasury bond yields were up 2.59%, while the 10-year bond yields rose 3.61%. US dollar futures index increased by 0.21%. And now it's time for a small break, but do stay tuned. I'll be back with the Asian and Australian market updates.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back. I'm Sage, and you're watching the Global Markets Roundup by Kalkine TV. A 3.5% jump in the European banks and a rally in beaten-down technology companies pushed an index of European stocks up over 1% on Tuesday, also helped by positive US data, bolstering Wall Street. The Pan-European Stock 600 index ended up 1.2%, with all major sectors in the black, helping it log its best session since July 21st. The London markets traded in a green zone after the release of the UK services PMI data. And according to the recently available data from the IHS market CIPS, the UK services PMI stood at 55.4 during September 2021. This is slightly up from the 6-month low of 55 recorded in August. Eurozone government bond yields rose on Tuesday, tracking moves in the US Treasuries after oil prices hit a 3-year peak, sparking inflation concerns and potential monetary policy tightening from the world's major central banks. Germany's 10-year government bond yield, the benchmark for the region, rose 0.183%, and that's a full 30 basis points higher than where it was 2 months ago. Japanese shares tumbled to 1-month lows on Tuesday, with growth-oriented shares hit hard as spikes in oil prices stoked further worries about inflation and monetary tightening globally. Nikkei average fell 2.19% to piercing below its 76.4% retracement of its rally from late August to September. South Korean shares ended at a near 7-month low on Tuesday, with worries over renewed Sino-US trade tensions and the US debt default risks and inflation weighing on the investor sentiments across Asia. The Kospi ended down 1.89% at 2,962.17, its lowest closing since March 10th. The index also hit an intraday low since March 9th earlier, dropping as much as 2.60%. On Tuesday, the benchmark ASX 200 index fell 0.4%. And meanwhile, the Australian Prudential Regulation Authority on Wednesday increased the minimum interest rate buffer it expects banks to use when assessing the serviceability of home loan applications. APRA has told lenders it expects they will assess new borrowers' ability to meet their loan repayments at an interest rate that is at least 3 percentage points above the loan product rate. The move was taken to counter the risk due to rising home loans. The Australian and New Zealand dollars weakened on Tuesday amid a broad sell-off in the equity markets, driven concerns over inflation, high oil prices and a possible economic slowdown in China, the biggest export market for the Antipodean economies. The Aussie dollar was 0.32% lower at $0.7265 as the Reserve Bank of Australia kept rates at 0.1% and maintained its bond buying program at its monthly policy meeting as widely expected. And meanwhile, Bitcoin rose above the $50,000 US mark for the first time in 4 weeks, adding to a series of gains since the start of October. It was up 4.5% on the day. And thanks for joining us on that report, but that's all for now. Keep watching Kalkine TV for more live market updates. Sage signing off.